shortly introduce our fantastic speakers today. First is Ruta Schwabiena, head of indirect taxes of 1stopVAT, who really knows her stuff when it comes to navigating tricky tax regulations. And the second one is Ivo Altmans, head of sales and business development at Quaderno, who is an expert in helping business handle their tax compliance worldwide. So I think in that case we can start, and I'm really looking forward to hear what our speakers have to share. So I think we can get started. And Ivo, yeah, I think it's your turn, right?
Yeah, thank you for the introduction. I managed to mute myself, which is also good. So my name is Ivo. I'm responsible for sales at Quaderno. And Quaderno is an application that makes it very easy for anyone who sells online to comply with international tax laws. We are joined today by Ruta, who is from our partner company, 1stopVAT. And what I'll do also give a general introduction about things that are that you should know about international taxes, specifically indirect taxes, and things we see a lot as a company because we deal with many different sellers like yourself who have many of the same questions. So I will talk for about 15-20 minutes, then Ruta will do the same. And at the end, we'll have plenty of time for all your questions. Make use of the opportunity because we have the tax experts from 1stopVAT with us today, as well as our great support team from Quaderno. And if you have any questions during the presentation, feel free to already input them in the chat window. So we'll take them into account when we get to the Q&A. To start off, first, right, let's quickly cover what indirect taxes are, because sometimes this can be quite confusing. It's a bit of a fancy name for all the taxes that you as a company get the privilege of collecting on behalf of the government. Most countries around the world have them. You're no doubt familiar with value-added tax, maybe also with sales tax, which you have in the US, or BTW in the Netherlands and the like. And doing this can be quite a bit of a hassle. And the result is that many companies deal with it in an unhelpful way. I mean, we from the sales team have calls with them all the time. And I would like to highlight 3 of these unhelpful strategies. And I'm curious if you recognize yourself in one of them. The first one we often see is this one, the ostrich strategy. People who think, okay, this whole indirect tax thing is really complex. I just want to sell my stuff online and I will ignore it, put my head in the sand and hope it all goes away. Unfortunately, the taxes don't go away. There's a reason the saying is there are 2 certainties in life. One is death and the other one is taxes. So sticking your head in the sand is not a good strategy because even though sometimes people get away with it, they still get close to an anxiety attack every time they get a regular communication from their local tax office. And sometimes they do get love letters from tax agencies from different countries that they have to deal with. So sooner rather than later, you have to be compliant. My guess is none of you are in this category who attended the webinar. Maybe you were formerly there, but the fact that you show interest in the topic and attend today's webinar means that you're probably not in this category. You might be in the next one, which is the polar opposite, analysis paralysis. Sometimes we speak with founders who, before making a single sale of, for example, their SaaS software, their software as a service company that is based in Europe, already want to know exactly how their software will be classified in each of the different states in the US and in the countries around the world before having made a single sale. And that is time that is obviously better spent, once the basics have been covered, meaning European compliance, in focusing and investing the time on developing a good product, doing marketing and the like. So also an unhelpful strategy. The final one is geofencing. So sometimes people think, oh, it's complex outside of my home region. What I'll do is I'll just cut off access from my application from people from different countries or region based on their IP address. Meaning that, for example, if you're based in Europe, you would limit access to your application to anyone who is based in a region where you're not tax registered. I still vividly remember the conversation I once had with an influencer, a European-based influencer who was about to launch his first digital product. And he had loads of followers in India. And he was convinced that as soon as he would launch his product, his Indian followers would be all over it. He would sell a ton. And he would then be, Indian government would find out he was not paying his taxes and he would be extradited from the European country he lived to India. And he had already been researching jail cells, what they looked like in India. And said, man, this does not look good. Also completely unnecessary. And also not in anyone's interest because, right, what everybody wants is that you as an entrepreneur maximize your sales and not geofence it. And right, it's totally unnecessary to do this because complying with taxes is quite simple. It's not always easy, but it is simple. There are 4 different steps you have to follow. First one is knowing your obligation, so where you're obliged to register for taxes. This depends on the country. For example, in the UK, there's a minimum amount of £90,000 in sales or thereabouts. And in Spain, where I'm based, you're obliged to register from the get-go. So before you have any sales, you should already register for VAT. And it's very easy to find out if you have an obligation in the country. Tax offices have this information, so your home tax office should know this. You can contact them. They're nice people. Generally, they will help you. Otherwise, right, entrepreneur organizations and chambers of commerce should also have this information readily available. And then once you're obliged to register for taxes, you register. This is a matter of filling out a form normally. You then get a tax ID. And from that point onwards, you can start collecting the taxes you're registered for. And then finally, the 4th step is filing the taxes you collected, typically every quarter, but it depends on the region. And the most difficult step to implement is the 3rd one, collecting taxes, because what the right tax rate is you should calculate depends on many different factors. It depends on where you're based, where your sellers are based, types of products you sell, whether the transactions are B2B or B2C, the amounts of sales you have. And I will dive into and explain how you can calculate the right tax rate on your different transactions for different scenarios. If you're based in the EU and selling in the EU, what you normally do is when you start, you calculate your local tax rate on all transactions. So if I would start, for example, a web shop and I would sell t-shirts and I'm based in Spain, I would collect the Spanish value-added tax, so which is called IVA in Spain, on every transaction. So no matter where my buyers are based. Then there's a 10K threshold for international sales. So once I would have hit that, I would register for a system, for the OSS system in Europe. OSS stands for one-stop shop. And from that point onwards, I would start collecting the tax rate of my buyer's country. So what this is a universal or a European-wide system. So once I would have registered for that system, I would collect the tax rate of the buyer's country. So if I, with my Spanish t-shirt web shop, would make a sale to Germany, I would collect and calculate the German tax rate. Then my buyer would be in the Netherlands, the Dutch tax rate. And of course, if they were in Spain, I would continue to collect the Spanish tax. And I would differentiate between B2B and B2C transactions because value-added tax and indirect taxes in general are consumer taxes, and businesses are exempt from these taxes. And the way to know if it's a B2B or a B2C transaction, right? In Europe, companies have a tax ID you can validate, and if they indeed have a valid tax ID, it is a B2B transaction, and no taxes have to be calculated. If I would start expanding my sales and would also sell worldwide, right? Exporting goods is exempt from indirect taxes. That does not mean that there may not be other charges, right? There may be export or import charges and the like, but these do not fall under indirect taxes. So value-added tax or the equivalent, you would not have to collect. For the export of services, if your services are B2B, so business to business, they're also exempt. So if you sell, for example, SEO tools or SEO search engine optimization services, right? No consumer or child will likely ask for a SEO package for their birthday. So these are exempt. B2C services, however, so if you would give advice to people on, for example, weight loss, right, would be a typical B2C package. For those, you would charge your local tax rate. And it's very important to make sure your product is indeed B2B, because governments have an incentive to classify it as a B2C product, because they can collect more revenue, right, on that. And if you have any doubts about whether it's B2B or B2C, 1stopVAT can definitely help you with that. Then finally, if you sell digital products are software products such as SaaS software, right? Software as a service, which is our product Quaderno, is an example of a SaaS, or ebooks, or access to membership sites or something. Those are all digital products. They have thresholds around the world, which makes a lot of sense, because if you think of governments as companies, right, they want to maximize their revenue just like any other company. So they want to tax sales to residents of their country, even if they are made by companies that are not based there. So many countries have launched thresholds for that. For example, South Korea, Australia, New Zealand, Switzerland, and many other countries. We have a really nice blog post on the Quaderno blog that gives you an up-to-date overview of all the digital tax laws and all the thresholds around the world. I recommend having a look at that. That could be interesting. And you have to monitor those thresholds. And once you hit a threshold, register for taxes in the country in question and start filing there. Finally, the US, I will go quite fast over this part, not only because it's this whole tax thing can be quite boring, but I don't think we have many people here who sell in the US today. If you want to go deeper in some of the aspects, we'll be happy to do that during the Q&A. The US, business-wise, many things are a lot easier than in Europe, but sales tax is definitely not one of them. Most states have a single sales tax rate or none. In some states, however, there are hundreds or even thousands of rates, because there are more than 12,000 different tax jurisdictions in the US. There are swimming pools that are in their own tax jurisdiction. So calculating taxes can be quite complex. And if you sell to other states, to different states in the US, you have nexus laws, which work the same as thresholds in many respects, right? Once you hit a certain sales volume, you are also obliged to register in different states. And that's economic nexus. There's also a physical nexus, which is something you can hit and can be obliged to register in different states if you have employees or use warehouses in different states outside of your home state. So this is all quite complex, right? And Quaderno has been developed to make it very easy to comply with all these tax laws around the world if you sell online. We have integrations with many different platforms, such as Shopify, WooCommerce, and others. as well as with payment gateways such as Stripe, PayPal, Braintree, and others. And what you can do is register for a free trial on our website, connect your payment gateway and our e-commerce platforms, and Quaderno will do the heavy lifting of the tax calculation and the compliance. So we will take all the different parameters I mentioned into account and calculate the right tax rate on every transaction. So validate tax IDs for B2B transactions, take into account what type of product you sell, where your sellers are based, and do all the complex part. We automatically generate a tax receipt or a tax invoice for every purchase that you can then send to your clients, provide tax reports that show you exactly how much you have to file in each of the places where you're registered. And finally, also monitor your global nexus and threshold exposure and send you notifications that keep you in the loop if you approach any thresholds and also one if you hit any of those thresholds. So I really, if you haven't done so already, I encourage you to register for a free trial on our website. You can configure everything in a couple of minutes and see exactly how Quaderno can help you, right, automate your big part of your tax compliance. So we provide tax reports. One thing we do not do is registrations, filings, and tax consultancy, which is why we partnered with our friends from 1stopVAT. Filing in Europe is quite straightforward, right? In the one-stop shop system, it allows you to file in the European country where you're registered for the entire EU. So if you're registered in Ireland or Spain, you can do a single filing there and file everything you collected for all the other countries. So for example, if I would have had sales with my Spanish web shop in Germany, the Netherlands, and Portugal, I would file everything in Spain, and Spain would take care of the redistribution. If you have exposure and registrations in many countries, it can get quite complex, right? Because every country has their different filing schedule, registration forms, filing forms, etc. And this is something where, right, it can be really helpful to work with an advisor such as 1stopVAT. Also, if you have detailed tax questions, because they can help you with solve exactly where you should register for taxes. And if you want to do it, they can also help you with the registration and the filing. But Ruta can tell you a lot more about that. So with that, I hand it over to you, Ruta.
Hello all, nice to see you. Nice to see the ones who gathered and prefers to listen and to get more knowledge about the taxes. As Diva mentioned, this is not so exciting and nice and entertaining topic, but I really hope that both of us will provide you the information in the most easiest way in order to be clear what to be ready for and not to be afraid of that term taxes, because once you know the backgrounds, you will be much more calm. So I will start with my presentation. So give me a second. Okay, I hope that you are able to see my screen. So I will start. So quickly, who I am. I am Ruta from company 1stopVAT. Currently, more than 4 years, I am in direct taxes. Mostly, I am focusing on e-commerce businesses. So my expertise is on that field of indirect taxes. The most of the clients are physical products sellers or digital product sellers globally in any country in the world. As1stopVAT, we are covering currently more than 105 countries with the VAT services, and that amount is actually increasing constantly. We are growing together with our clients. So whenever a new country implements VAT regulations, or our clients prefer to start to be taxpayers in new regions, at once we are able to do that. So what I'm going to talk about more today, so I will focus more on distance sales, mostly on sales of digital products, or more maybe often you have heard the term electronically supplied services, what it is, how to deal with the tax liabilities, how to evaluate the liabilities, what you have to mandatorily know, what are the main issues that the most of the sellers face with, and what you can expect. So I guess at once we can start. So in most of the cases, I guess, if you are trying to understand or to find information about the taxes, about the VAT, or what liabilities your business is going to have, you are facing with the term distance sales. So what it is, so it is described as distant contract between a professional, it means the seller, and the customer to provide a service or a good. A distance contract may be conducted by any mean. It means like email, catalog, or online shop, which do not require the simultaneous physical presence for the parties to the contract. In most of the cases, what might be an example of distance sales? So I am a seller, Ruta. I have online shop, ruta.com, and I am doing sales of these shoes online. So I am a distance seller because I don't have direct contact with the customers. I don't have a shop. All the orders are coming online distantly. The same it will be with the online digital product. So if I'm going to do sales of the health applications, so I do not need direct contact with the client, so I am a distance seller. So the next slide represents exactly this, that distance sales might be the sales of physical products and the digital goods. Yeah, so and as well, what it is important to understand, so the taxability truly differs once we are talking about the distance sales of physical products, or we are talking about digital products. About the physical products, I'm not going to expand more because Ivo represented a lot. What are the differences, how to apply proper tax rate. So I would like to move forward talking about the digital products. So first thing that you have to understand and detect as a business, if I am doing sales of electronically supplied services, if my product is digital product. So the examples that of the products that should be treated as digital products are the ebooks, images, downloadable software, software as a service, website hosting, and etc. The list definitely is not the final one that you can see here, but it is mandatory to understand what exactly is your product, as in each country the list might slightly differ, as let's say in most of the countries globally web hosting is treated as a digital product, and it is taxable when web hosting services are provided by non-resident seller. But if we talk about Colombia, this this product is exempt. So if the first step is to detect if my product is a digital product, I have to double check the regulations in each and every country, as this list is not applicable to all the countries. Yes, so if we are moving forward and talking about the taxability, so the main thing that all the sellers have to understand is where is the place of supply when I'm talking about the sales of digital products. So in both cases, if we talk about sales B2C or B2B, the place of supply is where the customer is. But here we have a slight different as well, how to detect where is the place where digital service is or digital product center is provided. As you may all know that I am, let's say I'm Ruta, I'm sitting now here in Lithuania, but I can use the VPN provider and to change my IP, and my location might be in US or in any other country. So this is an issue for online product sellers, how to detect where is my customer. Most of the countries have rules that the sellers have to collect at least two factors that indicates where the customer resides. So it means in most of the cases, one of the factor is IP. Another factor, it might be the country where the credit card is issued, the currency of the sale, and a few more. But of course, definitely, anyways, the main factor is the IP. If we talk about the sales of B2B, if my customer is business in another country, so the taxability is as well in the country where the company is established. So let's say I am Ruta and I'm doing sales of health applications online via my own web shop. So if the customer is the company that is VAT registered and is buying that application, so what information I have to collect is the customer's registration address, registration country. As well, what I would like to add here, if we talk about B2C sales, so the sellers have to track the amounts of sales, how many sales they do in any country in the world. As the taxability is where the customer is. It does not mean that, let's say, I am doing my first sale, which costs, I don't know, $2. I have to be registered in I want to take a country in Australia. It doesn't mean that I have to be registered there immediately and to charge the customer with the Australian VAT. I have to evaluate the threshold. In the cases when we talk about B2B sales, in most of the countries, of course, there are exemptions as always when we talk about taxes. If the customer who buys my digital product provides me with the valid VAT registration number in the country where that business is established, I can do the sale with zero VAT as the reverse charge mechanism will be activated. What does it mean for the seller? It means that the seller is not liable for VAT, the customer is. The customer is reporting VAT output in its country of establishment and VAT registration country. When I started to talk about the thresholds, so currently there is more than 103 countries in the world that have implemented VAT, or in other terms, in other countries you will see a term GST for non-resident providers of digital services. Once we talk about B2C sales. What does it mean? So it means that I am, as a digital seller, I have to be aware where I am doing my sales. So I have to constantly track each of my sale and to understand and periodically detect where and how many turnover I have from one or another country. Why it is mandatory? It is mandatory because each country has set the threshold. Once the non-resident company has to be registered as VAT payer in that country and to start collecting VAT from the sales to final customers in that country. Each country has different regulation. There is nothing unified. And for the sellers, the most important thing is that they have to understand that there are countries that the threshold is really huge and it's not easy to reach for medium or small business. But there are countries such as Turkey, United Arab Emirates, or India, and actually a lot of more that do not have the threshold at all. So what does it mean? So it means that from the first sale to that country, VAT registration is mandatory. So in that case, definitely Quaderno is a tool that can help you and to take out that headache. How should they know which are these 100 countries where the threshold is and what is that threshold if something has changed? So in that situation, Quaderno can help you to detect the liability once the VAT registration is needed. You do not need to do any extra calculations on Excel spreadsheets and so on. Of course, 1stopVAT here can help you to detect the countries which are more aggressive ones. What I mean aggressive ones. There are part of the countries that are actively tracking the online sellers and actively approaching them and detecting that, let's say, the VAT registration was not done on time. And you as a seller have a liability to be registered as a seller. So one of these really active countries definitely is India, that you can see on the slide. What is also important when we talk about thresholds, so for you to understand and to at least broadly evaluate if you as a business have reached the threshold. So the thresholds are in most of the cases calculated, the sales in 12 months are calculated, or the sales that are made in calendar year are evaluated. As I mentioned before, most of the countries are taxing, and in threshold you have to evaluate B2C sales. But there are several countries that have the legislation that all the sales made to that country, despite the fact if it is B2B or B2C, VAT, all these sales have to be evaluated. So, for examples might be as Russia, Belarus, it is as well Kenya that has the same regulation. So you have to be aware what sales you have to evaluate. Also, together with VAT, another taxes liabilities are appearing. So you have to be, as a seller, aware that together with VAT, corporate income taxes might be applicable. The examples of such countries, it might be Kenya, Taiwan, and Nepal. Also, more and more countries are implementing this ruling. A lot of African countries have the ruling that there is no threshold for VAT registration, and at once, together with VAT registration, the corporate tax liabilities as well arise. So you have to be prepared for that, and this shouldn't be a surprise. If we talk about the registration process, how it goes, so each and every country has totally different rules, how it should be done, what systems have to be used. Part of the countries have implemented simplified systems for all digital sellers. So what does it mean? It means that the systems are really easy, not specific documents are required, and the registration process is really quick. So for example, we can take like in Chile, South Korea, or Australia. So in these countries, the registrations are truly simplified, and not only registrations, but as well the filing systems are not difficult. Not a lot of information is required. And why the systems are named simplified? So it means that by using that system to report payable VAT, there is no possibility to reclaim VAT. So there is no way to include any of VAT input. The rest part of the countries are not so much simplified, and it's quite difficult to deal with the registration process, as local representatives are needed, and a lot of documentation translated into national language, notarized apostille documents are needed, and even in part of the countries, face-to-face meetings are needed of the local representatives with the authorities in order to get registered. So one of the countries that I can mention that it is really difficult to get registered, this is Mexico, as the process takes really long. The documents list required for the registration is as well really long, and the requirements from authorities changes constantly. If we talk about US, in US registration process as well, it looks like United States. It might be one registration, maybe something like OSS, like we have in Europe, but no, the registrations are totally different in each and every state. So it means that if you have reached registration thresholds, so you have to deal with a different state for the registration, and then with each of the state with the sales tax filing. The process of registration takes a really different time frame. There are immediate registrations. There are registrations that takes a week, a month, or sometimes it might take several months. Currently, from our experience, we are facing the quite difficult situation with United Kingdom, as like 4 years or 3 years ago, it was quite easy to make a registration, and it took mostly 1 month. And currently, as UK is changing the systems and the processes, the registration takes really long, and sometimes definitely too long for the sellers, as there is no registration threshold for digital sellers. Okay. And why it is important to track the thresholds, to, at least if it's too difficult for you as a business to do the calculations. So why it is useful to use such systems as Quaderno, where the calculations are done automatically, is to, on timely basis, to detect where you are almost at the threshold, or where you have reached the threshold, and to take immediate actions. As if you delay the registrations process, in most of the countries you will face as a business with the penalties. As well as each country is different, has different ruling, so the rules and the amounts of the penalties differs. Some countries apply penalties for late registration, some countries only penalties for late filing and late payment, so it depends, but you have to be aware. So if you are late, definitely something extra will be applied for you. What is good in that situation, that there are countries that if, let's say, I don't know, your business was really successful, or you just started business, but it popped up so quickly, and you successfully made a lot of sales during only several months, and actually you have double checked that you have reached the thresholds in, I don't know, in 10 countries, and the thresholds are reached significantly, not in few dollars. You as a seller have a possibility to apply for a voluntarily disclosure procedure. So what does it mean? It means that you can go into agreement with the country by saying that, okay, I have detected just now that I am late with the registration, and I would like to be compliant, and I would like to do the registration to pay all the taxes from previous periods, and to pay everything what is liable for me for the upcoming periods. So in these situations, if approved by the country, all the penalties are withdrawn, and only part of the interests or all interests are left. But definitely the significant amount of the penalties is eliminated. So in case once you will detect that I'm in a problem, that I have reached the thresholds and I haven't done any action to be compliant, so you can have in mind that it is possible to participate in that voluntarily disclosure process. 1stopVAT definitely provides the service and helps for the businesses to deal with that, and to be compliant anywhere in the world where it is needed. So this is it from my side, and I guess now we can start with the questions if we have any.